Now I'm live. So everyone heard just now.
Those secret kisses are for you secretly.
Oof. Let's see. Let's make a bunch of people be mad about the fact that they freely signed up for a newsletter or an emails.
Listen, I came on here just to tell you I hate your emails.
It's like, okay, first of all, I don't spam your emails, eh? Secondly, like, all you have to say is, hey, I don't want to be subscribed.
And it unsubscribes you.
Yeah. I just think that is something that I've never got used to. Like, for example, if you signed up for Tim Sykes or Raging Bull, they email you every single day, like non-stop. Hey, check out this. Hey, check out that. And it's like, I don't even do that. I just say, hey, there's something free going on, or hey, I'm gonna play games. And they're just like, fuck yeah. It's like, whoa. No, they don't. They just nonchalantly say unsub. I don't know. I read it as they're just being like a little bitch to me. Unsub. It's funny to me. I talk about it every time I do a live Q&A like that. It's just funny. Is the music okay?
Huh?
I know my mic's not muted. Oh, I see. I'm sorry, I just read one thing.
Are you reading things out loud to the chat?
No, he goes, Unsilent was like, your mic isn't muted? Unsubbed. Good times. What am I looking for? I'm just like aimlessly clicking things. Group name. Guys, you're gonna have to put me in a good home.
Find you a good home?
Yeah. Like as a collective group of people.
Not having children, so I'm putting it on my subscribers.
I'm putting it on my subscribers
To take care of
and
you.
random acquaintances to decide what they should do with me. How's it going with the new platform? It's going good. There's just some weird things that happen. And I think it's because I was streaming and it was bogging down whatever thing. I emailed multi-charts and been like, hey, these are the errors. And they sent me back like a list of things to try. I mean, I didn't tell multi-charts like, hey, yeah, I'm streaming at 1080p while algorithmic trading. They would have been like, yeah, that's the cause right there, dude. I don't have a long-term investment account. But if you did, you would just do one and then the other. I never did a small account challenge. I have no idea what you're talking about. Do Do people just make things up at this point?
Huh?
No. I thought you were talking to me, but you weren't.
I'm whispering to myself.
I mean, tell me I'm wrong. Like, show me proof of me saying I started a small account challenge. I have said a lot of things in my life. You would want Steve and I to live stream together? Like, why would it be epic? I think live streaming trading is fine if the person is going to be there the whole time and tell you why they're doing what they're doing. I was live streaming twice this week just so I could capture errors that would occur on the platform. I'm like super thirsty now. It's all that salt.
I think your thing is all the way.
Do not tell me.
Do you want me to get it for you?
You don't have to. It's fine. I'll suffer and die. It's fine. Don't worry.
I'm fine.
Don't worry about me.
I'm just dying.
Like, that was so much salt for dinner. My God.
You're the one that said, I want sushi.
Oh. But that wasn't a challenge. That was just a small account. Doesn't say challenge, buddy. What do you do? Just save all my tweets? I just said, trading the market is so insane. This week on my small account, which all my account statements of every single trader posted on Instagram. Oh yeah, I remember I did something like that. But it wasn't like a challenge. You know how people use that as like a tool to sell on something? Like, oh, I did a small account challenge, you know? That's not what this is. You know that, right? You understand the difference, I hope? Okay. Notice how there's no word of challenge, and there's no link to take you to my new latest and greatest course. I'm such a bad marketer. It's so bad. I think this was in 2019. So what this was is, I think I was testing out a strategy that was on a smaller account of mine. And I just wanted to see if the strategy would be scalable. And I think how that experiment ended was it wasn't. So like, yeah, that's all I can say. That's all I remember. That was so long ago. I don't know, some of my accounts, like I've had to change my accounts too because I've accidentally posted my account number multiple times. And so I've had to change my accounts, which I have several of, multiple times. I don't know, back then I'm not even gonna speak about it because I don't even remember what happened yesterday. So, like, barely. It is. I'll say this, Crypt. That is kind of creepy, dude. Am I streaming both in both places? Oh. If you're on YouTube right now and you wrote anything to me, I did not see it until exactly at this exact moment it started loading what people were saying. I apologize. The first thing I see from Scott's Needs is lol, that's a bad habit. What's a bad? I don't know what that's in reference to because again, I don't see anything above.
What? What are you looking for?
Well, it's on YouTube, so I guess I could also look at YouTube. I'm just looking at the platform because it's like multi-stream, but you can't really do anything from there. I'll figure it out. Figure it out. I can't believe we didn't watch that show for Canadian Day. Or Canadian Independence. We are heretics. Or at least watch Super Troopers 2. Something. Oh, to Shasha. Okay, I see that we're live here. Let me scroll back up. Skylar says, "Sup, brother? Hello." Hold on, guys. I have to catch up with chat. Hold on just 1 second, okay? Hey, Matt. Hello, AW. What's up, Matt? How you been? Hello, Curious Trader. I've been good. Just sleepy. Oh, Scott Need says, "Yep, I get 3 from Tim every day." Okay, so he must have been on when I was talking about that. Hey, I'm playing games. Sup, Matt? Did you end up building that practical thing you were talking about, your particle thing? You mean reverse osmosis? No, I didn't end up building it. I ended up buying something that does that for me. I was thinking like I would put a giant vat in the back and then have like a giant reverse osmosis machine and just have like infinite clean water, but I settled for a gravity filtered reverse osmosis machine that fits underneath the sink. How often do I host these events? Every Friday at 7:30 p.m. Eastern Standard Time. Okay, nothing rhymes. So, does algo trading need good computer? Yes, if you're in a data mine, for sure. I'm currently collecting data manually. I'm tracking specific MCAPs and floats. Is there a way to automate this process? Yes, learn to program. You just have to then connect to an API. Posting. Oh, yeah. He's talking about me posting my account number multiple times by accident over the years. What's the best way to automate market data collection to backtest strategies? Again, you need to find a data provider, hook up to their API, then use a token to call in the data from the API, and then you can store it somewhere, preferably on, you could do it on the server, but maybe even Dropbox, but then you'd have to upgrade Dropbox. That may also be unsecure. Or maybe a external hard drive. Yeah, it is minerals. Nothing runs with silver. Okay, so now we're all caught up, I think. I would say if someone does a small account challenge, that's a good marketing tool, but I honestly don't think it's real. And I helped build a website that allows people to verify their trades third party from their brokerage house, and that website is Kinfo. So I would say if someone was serious about it and they want to do a small account challenge, ask them to verify on Kinfo. The trades will get pulled right from their brokerage house. There's no way to delete the trades. There's no way to manipulate the trades. There's no way to add the trades. Like, it's all straight from the broker. And then if they do well, like, sure, that's fine, but that's only over a certain time horizon. I'm not hating on it. I have no real opinion. I just think it's kind of a false way to gain attention, in my opinion. Hey, Canada Computers. You have a water distiller? Make sure you add mineral straight row water isn't the best. Yes, we talked about that. What programming language and what API to use? What data provider? Where can I read up on this? Thanks. So programming language, Python, C++, and APIs, you're just type in like well, I can't say that. I would say, what type of data are you looking for? I use TickWrite, which is a program built by tickdata.com. So it's a program, but they also have a callable API. And they go all the way down to 1 tick level. And then, but there's tons of data providers. It really just depends on what you need. Where can you read up on this? Google it. Yeah, what was interesting about warrior trading, and I don't know if this is true or not, but this is what the Kinfo company tells me, okay? The only thing I did with Kinfo was I helped them with their broker integration, because according to them at the time, so this was 2 or 3 years ago, or 2 years ago, I think, no one would verify their trades on their platform, and they needed someone to verify their trades to test out the connection between different brokerage houses. So I was like, sure. So I took one of my test accounts where I like test my algos before I put them in a live setting, and yeah, I just kind of helped them do the testing and the somewhat of the building out of that. And it took about 2.5 years to get as many brokers that are on Kinfo now. And I was fortunate enough that I could actually reach out to other people that had different brokerage houses than me, such as like Tim Gertani, Steven Dux, Michael Good, all those people, and really make a platform where there was no way to cheat verification from your account. Now, you can obviously use Kinfo to add trades and stuff manually, but what will happen is when you add a trade manually, it will say unverified, and then it will say unverified at the top, and then next to the trade it will have a little mark that says unverified. Okay, and then if someone has never added a trade manually, it will say verified. And then to get back to the warrior point, according to Kinfo, they reached out to Warrior Trading. They never heard from them, and then I think the Warrior Trading on their website, they wrote a review that was negative of Kinfo to kind of cover their ass of like, oh, we're not verifying through there. So that's that story as a whole. Not sure if it's true, but yeah. So is TradeStation the broker and Python is the code? No. TradeStation is a broker platform. So what you're looking at on the screen is the TradeStation platform. And TradeStation is also a broker. So in order to have the platform, you have to open a brokerage account with TradeStation. Python is a programming language. And TradeStation doesn't use Python. It uses its own code called Easy Language, or its own programming language called Easy Language. I'm not really that familiar with ThinkScript, so I can't really speak to it. Is it possible to create any algorithms for trading options? I'm pretty sure it is. But I think you would have to probably build everything yourself. Even in TradeStation, I don't recall them having something that's allows you to autonomously trade options. I don't know, I'm not really an options person, so that is out of my wheelhouse. I think Easy Language is a great programming language. It's a wrapper language. What is TradeStation's Easy Language built on? Is it Pascal? I think it's Pascal. And then there's a wrapper that they put on it called Easy Language. Have a good night, Scott. I think it's that. Could be wrong though. Well, remember, TradeStation was built in the 80s, I believe. Thank you for the water.
You're welcome.
My day was good. How was your day, Molt? No. Okay. So, nothing rhymes with silver. When you go to Thinkorswim, right? Is that a platform or is that a broker? Well, let him answer. Sometimes people learn the best when you just ask them questions about things. Okay? Just don't shove him off and say, "Go watch something." Let him answer. So is Thinkorswim a platform or a broker? Yes. It's a platform, right? Who's the broker of Thinkorswim? I feel like I should have one of those Jeopardy countdown things. Don't destroy my song. Right. So who's the broker in that situation? Correct. Okay. Because they own the platform. So, well, I guess maybe it is Fidelity now. I'm not sure. Let's just say it's TD Ameritrade for the sake of argument. Okay, so now that it seems you understand the difference. Okay. So imagine TradeStation is both the broker and the platform dealer. Okay. Now, the clearing firm, I believe, for TradeStation is Monex Group. Okay. But just to keep things simple, TradeStation is both a broker / platform. Okay. So there's no distinguishing between those two. Easy language is the programming language for the platform, just like ThinkScript is the programming language for Thinkorswim. Okay, does that make sense? Now I'm curious. Let me update my information. Who is the broker? Because I thought it was TD Ameritrade too. Yeah, it's TD Ameritrade. Why did you say Fidelity? Or are you just pulling my leg? Holy shit. It says Fidelity is laser focused on consistently delivering our customers the best value, choice, and service in the industry. Something investors clearly expect and deserve. Fidelity sent the following stats to emphasize her points, noting that they make it the undisputed scale leader which enables us to bring more value to customers. On September 30th of 2019, 72 million customer accounts, including 22 million retail accounts, nearly 10 million accounts through our institutional business, and roughly 40 million in our workplace. 7.8 trillion in total customer assets, including managed assets of 2.8 trillion and 2.36 trillion in retail brokerage assets. Customers are opening nearly 10,000 new retail brokerage accounts each trading day. That's nuts. Nuts. I don't know. I typed in Fidelity buys TLS, but all I see is Thinkorswim or Fidelity Active Pro Trader. Who knows? So the TD Ameritrade buys Thinkorswim for $606 million. Yeah. Yeah, it's Schwab. There we go. What's the answer? Schwabikins. No, TD Ameritrade bought Thinkorswim from Tom Sazanoff. Like, that's, I knew that. I didn't know that Schwab owns TD Ameritrade. Well, it says Schwab plans to integrate Thinkorswim into its own tools for both retail and independent advisors. There we go. We were both wrong. It's a miracle. Either way, point is, as long as Nothing Rhymes with Silver understands the difference now. Hopefully you do understand Nothing Rhymes with Silver. Also, Crypto Kill, thank you for the follow. So you're asking if the TradeStation platform is the only thing that offers automation, and the answer is no. Multi-charts, NinjaTrader, TradeStation, what's this other one? TradeNav. These all have their own scripting languages which allow you to automate. Hello, Mario. Have I ever thought about starting a fund? Yes, but I think that's naive because I've never worked at a fund. And my assumption about starting a hedge fund would be probably it's going to cost a lot of capital to build the back end of anything. And unless it was like a really small hedge fund. So I've always wanted to work at a hedge fund just to see what's the day-to-day operations, what do they do, what do they think about, how much money are they running, and with each level of money. So like if you had $10 million, you probably run a small fund by yourself. You had $100 million or 200, 300, 400, $500 million, like that requires a team of people, and I don't have any experience in that. That's a whole different ballgame. So I did apply to work at a couple hedge funds. I applied to work at Bridgewater, and I made it to like the second round, which was like a personality test. And then I never heard back from them. And then I applied to work at Volvo Ridge, but the problem with that is that Volvo Ridge was moving their operations for like a year and a half or something to a new building. And so they would post, hey, we're looking for these people. And then you would send in your resume or whatever. And then they would say, well, like, this is great, but we're not really hiring, even though we know like we're looking for people, you know, call us back in a year and a half. And by the time that had happened, I was already planning on moving, so I couldn't work there. That would have been awesome. And then another place that I wanted to work, which I didn't apply for, I just talked to the actual manager himself, which was Jeffrey Woodruff at QIM. And he was like, yeah, we're not hiring, because they've had the same like 35 people. So okay, let's be real. Like, I didn't put in, I'll work at any fund, right? I wanted to work where I lived, which there's not a lot of quant hedge funds, but I'm not naive enough to say, oh yeah, I understand everything it is to run a hedge fund. So I think if I was to run any kind of money, I would first want to work for a couple of years at a fund, understand the inner workings of the business and what it takes, and then decide from there if that's even like a good route to go down. So Easy Language's limitation is that it is TradeStation and multi-charts specific. So if you ever wanted to do like machine learning or whatever, or something more advanced, like, you're gonna have to build that out yourself. You couldn't do it inside of TradeStation Easy Language. An anonymous cheer. Thank you, bud, for the 100 bits. Does that make sense? So learn to program. That is the future, okay? Like, there are tons of free resources. You guys growing up right now, or living in this day and age, maybe you're older than me, okay, and you're still interested in programming, you can learn programming in a couple months. That's never been that way before. So you have Udemy, you have Pluralsight is a great one, okay? They have hundreds of hours of content on literally everything, and they have assessment tests that allow you to say, okay, where are you now? And then you go through the course, and then you take it again, and then it's like, where are you now? Right? And it costs, like, you could do the subscription service and it would be like $50 a month, or you could do a whole year and go through all of their stuff, and it's taught by people who are been, you know, doing programming for a long ass time. So yeah, I mean, you don't have to learn from me. You don't have to learn from anyone. All you have to do is lock yourself in your room, put your nose in your computer, and just learn. But when I was learning to program, that stuff was not around. It was books. And it wasn't at your fingertips. And you couldn't like self-assess yourself. So build it yourself, meaning you build the whole architecture. So you build Um, you build the front end, so the data coming in, so you can see it, or maybe you don't need to see it, your preference. You build the strategies, which then send orders from your script to the API, which then, you're in the position. So you just do all the things the platform would do, but it's not going to be as pretty, obviously. I mean, you could make it pretty if you're a really good developer. The thing is that developers are the unsung heroes for retail traders. If you look at platforms like Multicharts and TradeStation specifically, and you look at all of their functionality and how everything in the front end is beautiful and customizable, and really all you have to do is like learn to program and drop in your code, and then you just click a button and then it will automate the trades for you. Like, that part takes an enormous amount of time. So developers, front-end developers, back-end developers, that's where a lot of the work is. And then building the strategies, testing the models, doing the steps to validate the models, and making sure like that when you go live in real time over the next year or two, that the strategies are robust and they hold up, hopefully. Nothing's guaranteed. Yes, that's a lot of work in and of itself, but once you're done, everything else is taken care of for you. Does that make sense? Versus if you were to do this on your own, like in a C++ or Python, you're gonna have to know a little bit of everything, and you don't have to build a whole front end for yourself, but you could. And you're just executing via scripts at that point. Machine learning is a type of optimization, essentially. There are packages now that while you're programming, you can have like an assistant help you figure out what should go in a certain place, which is, it's not, well, it could be machine learning, but machine learning is basically an optimization process. Yes, Copilot, I think I was using, what was it, Kite? Yep, here you go. Something like this. This is from OpenAI. This is like a really interesting concept to me, because if you're an experienced programmer, like, this would be really obviously super helpful, but you probably wouldn't need it. But if you were just starting out, like, I wouldn't know if this is a good thing, just because you don't have to memorize necessarily what you have to do. So for example, can you guys name the phone numbers of your 5 closest, like, can you recall the phone numbers of your 5 closest friends? Okay. So most people 25 and under would probably say no. Why? Because they've all grown up with cell phones that just do that automatically. They memorize the number, they press a button, and it's done. This is, I'm not knocking this, but I would say, understand what you're doing and then use something like this. Because although this is extremely cool, And it's kind of like kite. Yes. It's a AI coding assistant. Same thing. So you see, like, as someone's programming, it gives them suggestions of what should go there. And this is using machine learning, basically. But machine learning in general, when applied, is an optimization process of, well, okay, it's not an optimization in the traditional sense, but it's just more or less a way of designing a strategy. That's the best way I can put it. Because there's supervised learning, there's unsupervised learning, there's reinforcement learning, and each of these processes are ways of constructing a model given a certain data set. Yeah, I agree, Wilson. I think that this kind of stuff may make people obsolete on some level. I don't know, ask Sang himself, like, how he defines it. Just understand that my definition to you, Silverback, is a very, very simplistic definition of machine learning. Like, it's not, I would say it's not entirely accurate, but I just don't want to talk over your head. It's a whole sub-study, like, just Google it, learn about it. Do you machine learning? Do I use machine learning? Sometimes. But more as for fun, not really for trading. Have a good night, Wilson. probably remove this because maybe it's distracting some of you. All right, are there any other questions? How do you get started with automated trading? Learn to program? Do you guys see a common theme here? Watch my YouTube video where I go over books that talk about that. Well, that's something you can test. Nothing rhymes with Sylvie. You think every market is highly correlated? And also, what do you mean by correlation? There are different kinds of correlation. Are you talking about a Pearson's correlation? What do you mean by correlation? Growing, we do it every day. I can't believe that song has survived all this time in my mind through childhood. Do you recommend using a stop loss if your trade doesn't go as planned, but you're ultimately bullish on the stock? You should test out your stops with whatever strategy you come up with. And understand that stop losses are just one form of risk measurement. Okay, so let's go back to this correlation thing. I mean, I didn't get an answer from you. Nothing rhymes with Sylvie. Okay, so there's Pearson's correlation. There's Kendall correlation. There's Spearman's correlation. The most common used in markets usually is Pearson's correlation. So these are calculations you can simply do. And check the corollary effect between, let's say, something like gold and something like the S&P. And that's going to be an average. Now, here's the problem with correlation, right? Correlation is not stagnant. It moves around. So just because on average these two things are not correlated, there will be times where they are correlated. And when they are correlated, and you're long both of those things, you've essentially doubled your risk. Does that make sense? Yeah, but these are things that you have to be more specific about. You guys say things that are vague. It's like, these two things are correlated. Okay, well, what kind of correlation are we talking about? You ask someone that, they're like, oh, what do you mean? It's like, well, how are you determining correlation? Well, I see this thing go up and this thing go up. It's like, that's not correlation. So that's something you guys need to think about. And if you create a portfolio of strategies that are trading uncorrelated markets, that's ideal. You can also somewhat achieve uncorrelated bets within the same instrument, but when volatility increases, what ends up happening is these bets all become the same, essentially. Price arbitrage? Sure. But I have not really invested a lot of time in making a model around that. Well, automated trading meant to get away from jobs numbers and stuff. The probability of you being a successful trader is very slim, no matter what you do. Because you could come up with a model that backtest, you forward test, you validate, and everything looks good. But what if you start trading that model and you go through a losing period? So that can happen. Or you start trading a model and it pretty much just does nothing. It just kind of goes sideways for a while because that's where you are in the strategy. And rarely do you put on a strategy and it instantly starts winning. And then on top of that, the long-term success of any model at best is 3 to 5 years, meaning it continues to perform in line. So it is a way, but it's not it's not the you can just set it and forget it and walk away and the strategy will work forever and ever and ever. That doesn't exist. So again, as I've stated many times, elevate yourself, educate yourself, go work at a hedge fund. You'll make 6 figures easily if you're good. And then build up your cash pile, and then if you want to trade for yourself, then trade for yourself. I think people fall in love with the idea of trading, and it's very difficult, no matter what path you choose. And what always sticks out in people's minds are the people who are successful, but even those people who are successful go through losing times. And they may even start off in a losing time, no matter what they do. So well, I would say Skylar, yes, but that has large tail risk. So you have to be careful. I'm not an options expert or pretend to know a strategy that has overall reduced risk and good reward. So my primary markets I trade are the E-mini S&P 500, gold, oil, natural gas, soybeans, euro, Japanese yen, and those are kind of my go-to markets. Am I getting enough sleep? Yeah, but so I don't know if you heard me speaking the other day, which I think you did, Mitch, but I was so excited to get to work today because I was like, man, I got a shit ton of stuff to do. So I was up at 6. Very motivated. Do I have advanced mathematical knowledge? I would say, listen, I have a degree from an okay university. I have a financial engineering degree, a master's in financial engineering. And I would say my programming skills are okay. I would say my math skills are okay. I would say I'm average. I do it all the time. Do you know what I'm saying? But if I were to be up against like a PhD physicist or mathematician, like, I don't think I would be able to compete in something like that. I know enough, and I'm constantly learning. That's really what it comes down to. In comparison to most retail traders, yes, I would say like I know a little bit more than they do, but you never know. Do you have an opinion on these subscription bots, for example, 3 commas? I have no idea what that is. When you're coding, do you have models that include harmonic patterns, or is this the basis of models based upon standard deviations and moving averages or something like that? I don't have anything that looks at harmonics. When I build a model, it is a data mining process. So I'll take open, high, low, close patterns, maybe some indicators, maybe use like another market, like an intermarket relationship. So for example, data set 1 would be the E-mini S&P 500, data set 2 would be the VIX. And so what I would do is I would have 5, let's say, thousands of different signals. So one signal would be like today's open is greater than the high of 5 days ago. That would be one signal. So I would take 5,000 different signals and combined 5 or 7 of them to find the best fit for the fitness function that I chose, which was something like, let's say the fitness function I chose was expectancy score or CAGR or percent win. Okay, so the algorithm is going to search for the best combination of signals given the fitness function. Does that make sense? So that's the way I build models on the market. It's very much a data mining process, which can be dangerous. And there are a lot of pitfalls that you have to be careful of. Now, another way to build a model is to look at something on a chart or whatever you're looking at and say, I keep seeing this thing. Can I describe it to a machine? And then program it and then just backtest that idea. But remember, a backtest can lie to you because a backtest is the previous winning lottery tickets. And remember, the market will never come in that order ever again. So once you build a model, you have to stress test the model to give yourself a rough idea, will this model work forward in time? Yes. And even when you stress test the model, that doesn't mean that there's any guarantee that it will work in the future. I think everyone starts off as a quote unquote discretionary trader. Absolutely. Yes, I do. But Monte Carlo simulation only reshuffles the trades, or you could reshuffle the data. But it would just be better to create synthetic data sets using like bootstrapping Monte Carlo and then create a model based on that. But the issue is even when you do synthetic data and you, let's say you generate 100 different synthetic data sets, and then you make a strategy on that and then you put it on the actual data set, well, you may be disappointed. But that's just the name of the game. Listen, I used to be very hard-nosed about discretionary traders, and I used to be very critical of them, and I used to be very in their face about it. I don't care anymore. I really don't. I just do my own thing. I say what I think works and prove what I think works, and then people can take it or leave it. Could AI become a perfect trader? I mean, it's possible. So how many people in here believe the market is a random walk? That all of the things that we see is random noise and it's futile to create a strategy. Thank you, Mitch. So Chu believes that it's not random. Can you be more specific? Right, because if you're an options seller, Skylar, like that makes sense, right? That's why you probably enjoy that strategy. Okay. But see, I would agree with you. Okay. I would 100% agree with you. But I would also say that the markets, if we're looking at a distribution, the market's distribution from time step A to time step B morphs. So in one period, it could be random. And in the next period, it could have high kurtosis with large outliers. So I think it morphs. So it's constantly morphing, it's in flux. And if we looked at the market from a fractal point of view, we would say that we're able to build models that work into the future because the data exhibits what we call long-term dependence. Or I like to call it an echo. So in this way, it is random, but at times, and also non-random at times. But it is a game in which you will never be perfect at trading it, or no matter what you do. Yes, so what you're talking about, KNW, is the law of large numbers. Right? But again, you have to be careful, because if you had a strategy that had 500 trades and then you go live with that and the next 100 trades are losers, and you say, well, what happened? Right? Then you have to ask, well, was that long enough? Or is the model really dead now because maybe the markets shift? So that's what makes it hard, I think. I think that during high volatility, I don't know, that's a hard question to actually answer. Because in high vol, things tend to trend in one direction or the other pretty smoothly. So it may go up very large or down very large. Volatility is just a metric. And volatility in and of itself has no predictive power, in the sense it's not, volatility isn't trying to predict the trend. It's not trying to say that this is a counter trend move. It's just an artifact. But it is the lifeblood of the market. I'm still learning to code, dude. It's a never-ending discipline. There's always something new that comes out, especially in this day and age. My God, the amount of books that are produced about all the new techniques and programming, and then you got machine learning, then you got artificial intelligence, and it's like, you know, you have to learn all of these things, and it's just ever evolving. Like, so you have like a basic knowledge of what the language is, and then you do a project or you do something that you're interested in, and then you build off of that basic knowledge. But just because you build over here, let's say you get into a different situation, well, now you have still the basic knowledge, and yeah, great, you did this project, but now you got to learn how to do something else and solve another problem in a unique way. Well, we can prove that the indexes have a mean reverting characteristic. Like, we can definitely prove that on paper. But the question is how do you know when probabilistically that this is a good mean reverting event, or it's just going to continue down? Are you stating that it is... I've never seen this word before. Hold on. In context, I think I know what it means. Are you stating that it's difficult to program an automated script that would place trades based on a specific candlestick pattern, such as a reversal signal? No, I'm not saying that that's hard. I'm saying that anything you do, you should test it out. That's basically my main mantra. Don't just assume because someone said it or someone wrote a book about it. Like, you can generally program a lot of things and test them out and see how they fare. Right. So the market is like bridge. It's not like poker. It's not a finite probabilities game. There's information we know and information we don't know. And I mean, that's what makes it fun. That's the only way that's all I can say about it. That's why I like to build models on it, because it's just like there's just that element of randomness that makes it hard. I trade predictable trash. Yeah, every market has its own little characteristic. I don't think that was ever said, Skylar. I bet the farm on that one. Well, I think trading in general is like, there's tons of white papers proving like people don't make money in the market and day traders don't make money. There's a lot of evidence against doing this as an endeavor. But I would say that all of those white papers is what makes people want to do it. No, you did? What's funny? Nothing? Okay. Hey Matt, where do you stand on market manipulation? Not whether it's good or bad, but how heavy do you think it is in the futures market? I don't know. I couldn't tell you with any certainty. Yeah, but I think that there's a lot of studies that say like most day traders don't make money, and that if they do make money, it's basically less than minimum wage, right? But that may be true on the whole, but there's definitely outliers out there. There's definitely people who probably make a killing day trading and they're doing something that is not in that study. I'm not against science. I'm just saying that there are obviously outliers in all data sets. So we can't definitively say that there are no day traders ever that will ever make money from day trading. It's just improbable. Does that make sense? That's my stance on it. And you guys be nice to each other. Don't argue with like over that. There's always people doing things that people believe are impossible or statistically impossible. And every study that's ever done cannot capture every single data point. Well, sure, you could look at it as a sport. I guess it's also how you define what day trading is. In my mind, a day trader is someone who trades in and out, in and out, in and out like a scalper. But if I took 5 trades all through the trading day, does that make me a day trader? Like, I don't know. So, like, if I have an intraday system that trades 5 times in a day, or maybe 2 times in a day, maybe it buys in the morning, gets out in the afternoon, and then maybe it holds until the next day, or maybe it gets stopped out. Am I a day trader? So, how these things are defined is also important. Right. And I mean, I know people that short sell penny stocks and they make money doing that, and they'll be in and out in less than a day. Again, I'm just saying how these things are defined, the length of the study, how many people are in the study. All of that is important information. And yeah, I would say if you choose to be a day trader, it's pretty hard and you probably won't make it. But I honestly think that about any form of trading. I think no matter what you do, I think trading in general, designing models is difficult. No matter what that model is. So, I don't know. I've never been a person that ever sold the dream of trading to people either. I've never told people like, hey, yeah, it's so easy, you can do what I can do. Like, I've always told people like, don't do this. Like, unless you really love it and it's something you're passionate about and something you want to learn about. I had a guy, like, I don't know, a couple weeks ago, he was like, yeah, I'm debating whether I want to go to school or I want to take your course. And I was like, go to school. Like, that's an easy answer. What are you doing? You know, like, make this a pursuit of something you eventually want to do, but just take your time with it and make money and have a good job and go to school and do all of those things and teach yourself and learn. That's it. There's no reason. Right, but if I were to read a study about, let's say, day trading doesn't work, right? The questions I would ask is, what time frame? What are they trading? What are they doing? Is there any strategy, or are we just talking about random noise? How many people were in the study? You know, these are all very important questions to ask about a study, not just take it on face value. So I would just say, from a mathematical perspective, if you're trading more often and you don't have an edge at all, you have a much higher chance of losing more money over time. And also, if you don't trade, if your stops aren't wide enough or appropriate for the volatility in the market, or whatever your risk management is, you're not giving the market enough time to produce a trend, and trend is a function of time. And all profits are the basis of trend. So therefore, the less time you give something, the less trend you'll have, which means inevitably you make less money, and therefore day trading would be a very difficult endeavor. Does that make sense? Can you host tomorrow? I won't be on tomorrow. It'll be Saturday. Do you mean you want to be like in the Discord and chit chat? I don't understand what you mean by host. Right, so there's a cutoff point to that, right? I agree. I wouldn't say you lose everything. It's very market dependent. And time horizon dependent too. Are there any other questions? Yes. Well, no, there's nothing like that exists. I don't know, I just for me, I just let people do what they do. I don't, if it works for them, that's great. Like, it's not my job to police the world. I believe so. If you want my honest answer, like, I just turn on all my stuff on Sunday night, and if the market's ticking, then yeah. There's no such thing as best indicator. It's always a combination of things. So the basic formula for creating anything, in my opinion, is structure and context and entry. There's no such thing as best, Tilo. That is very subjective. No, there's just no such thing as best. That's it. Do you honestly think there's just like one best thing to do? Be honest. And also, this, in my opinion, ties into human nature, which is instead of just playing a game of odds, people are always trying to have only winning without losing. And that is against the basic structure of the game. Well, are you testing your stops on the strategy you built? Okay, but what does that mean? You've said see, this is the thing. I read a sentence like that where it's like, technical traders say price is the best indicator. What does that mean? That is just words. What is a technical trader? And what is price is the best indicator? How are you defining those two things? Of course, technicals are not 100%. But again, this goes back to the thing, how you define what price is. What do they mean by price? Do they just mean open, high, low, close? Well, that's just data. Are they talking about a bar pattern? Are they talking about structure? Are they talking about microstructure? Like, it's a sentence that's vague for a reason. What is price action? How do you define it? How do you test it? How do you do these things? That is the question. So for me, I can't answer stuff like that because my mind instantly goes to, what do you mean by that? And when I grill you guys on stuff like this, or I keep asking you the question of like what it means, it's not to make you feel bad, and it's not to push you away or anything. It's to make you think about what you're saying. Does that make sense? What's up, Booty God? I'm just telling you how I interpret those things. When someone says price action, I ask them, what's the formula for price action? If someone says, what did you say? Price is the best indicator. What's the formula for price? What are we talking about here? So my main thrust always is just test what you mean. And you may say, well, there's some things I can't test. Okay. That could be true. A lot of things you can test, though. What's my thoughts on the recent lumber market? I don't know. I haven't really looked into that. You want to explain it over voice? Are you in my Discord chat? Yes, it does. KNW, are you in Discord or no?
What's up, baby?
Oh, it's just headphones. So I can make it.
Oh my gosh. And that's when he died.
And that's exactly. At that exact moment, he died.
He died right there.
Ooh, you're right about waking up early, though, sweetheart.
Yeah, makes you tired.
Packs a wall up, dude. Yeah, if you just said, are we not doing voice? Yeah, you want to do, I'm asking you, do you want to do voice?
That could be.
Where's the link to your Discord and when are you going? Yes. Go to the Discord, which is, should be in the links below. Here. It's a free Discord. So there's the Discord. It's on YouTube, yeah, it is. I just posted it on YouTube. It's right there. I see it right there. Okay, so once you're in the Discord, on the left-hand side, you'll see something that says, "Let's talk." And then I'm in there.
Yeah, what up?
Okay, cool. Hold on 1 second.
Okay.
Let me turn this music down, my god. Okay. So we have K and W on the mic.
What's going on?
Nothing much. How are you?
I'm great.
So you said you wanted to explain yourself?
Price. Yeah, price action.
Yes.
You're asking for price action. What someone means by price action?
Yes, I believe that's what we were talking about.
Okay, so the way I look at price action is I'm looking for apex areas on my charts based on previous resistances, and I'm expecting for certain things to happen in those areas. Like I'm looking for order flow, and I trade off a dome, right?
Mm-hmm.
So I'm looking for, like, for example, if I want to short something at a certain price, I'm waiting for that price to hit, and then I look at what happens there, right? So the price action delt would tell me if there is the volatilities, if there's too much volume for this to work out, or is it gonna work out in my favor? So, for example, if I want to short something at $25, and
Okay,
the
so
price action,
hold on 1 second. I don't mean to cut you off.
yeah.
But so can you give me a recent example, like of today?
Today, okay. For
So-
example, I traded MRIN, right?
Uh-huh. So let me pull up
Okay.
MRN.
Okay, look it up.
Okay. And then what is the time frame that you're usually on?
At the beginning of the market, like 2 minutes or 1 minute.
Okay. Okay, so we're on a 2-minute chart. Do you have multiple windows open?
Yeah, I do.
Okay. How many?
I trade like 15 minute, 1 minute, and I look at the daily.
Okay, so 15-minute. So I got 2 minutes. 15-minute. Daily. Am I missing something else?
No.
Okay.
15 day, 1 minute, 2 minute, 15 minute, and a daily, right? That's pretty much what I look at. But I already knew, like I've been following this for days, right? So I know that it's like trading a lot. Like I track like dollar block values, and I track like volume and volatility. Like yeah, I track how much dollar are going into these things. I know at a certain point, if this doesn't match, like for example, you see like the like if you look at the daily,
Mm-hmm.
you see like every day we've been trend like the last 2 days there was always over like $4 billion traded in this stock, right? So for
Is
the
it
price
$4 billion in volume, or what do you?
yeah, and volume like dollar block volume, as in like people bought and sold, and I'm tracking the dollar value, also volume as well, right?
Mm-hmm.
So I know like if like I have a prediction formula, so I mean it changes all the time because of the volatility currently, but it's about like whatever happens pre-market, I use that times 10, and I'm looking for the volume to match throughout the day. And there is a certain time of day that I also track the day lows, day highs, pretty much yeah, pre-market high, pre-market low. Like I track like retracements. I pretty much know how much they're gonna retrace off the top. I pretty much know how much they're gonna pop from the beginning of the market. Usually like they go up like 30% or something like that if there's a lot of volume building up. right? And I track like different market caps, floats. Okay,
I under,
I have a lot of data that I collect, right?
right, but even the formula you said you adjust it all the time.
Yeah, I adjusted based on how much money comes into this market, right? Because there's a limited amount of money that comes into this type of place, and I only stick to stuff uh that's low flow, right? And like I said, like most of these companies are you know they're
I,
losing money,
I
bleeding
kind of,
money.
yeah,
Yeah.
I understand what you kind of mean, but again, it sounds like just a lot of different to me. Okay, I'm not saying that you can't make money as long as you're making money off of it. Like, I'm
Yes,
not,
I.
I'm not here to judge. But what I'm saying is like you said a lot of things, but it wasn't like specific.
What
Um,
do you want? Like, what specifically do you want?
so
What don't you understand?
yeah, so it's like I don't understand like why do you multiply by 10?
Because that's what my predictions say. I have samples, like at least I think I have about I think I have over 300 samples for this. Yeah, in my data tracking. So like I only track specific things, right? Like things need to run 40% pre-market. They need to
Okay.
trend. They have to have volume, right? A lot of volume. They can't have more like I for example I'm not trading anything that has below 10 million volume, but if it's more than 40, then I don't trade it as well because it's like too much volume, right?
I see.
So the more volume that it has, the worse the my odds are, right? So the more people are trading something, the worse that it is for me, especially because I'm a mainly short bias trader, anyways, right? I
Right.
hardly go long sometimes when I cover, but like right now, if I'm going along, yeah, like I guess the market conditions right now are just like favoring long strategies, but yeah, I just stick to one pattern pretty much.
Hold
And
on.
if it doesn't show up, I don't trade, right?
I see.
Yeah.
Okay, so criteria number 1. Let's try to list this out so it can make some sense for me at least, okay?
Okay.
So criteria number 1 is what?
Volume.
Volume. So the volume,
And actually, start. It's the percentage, like the
okay.
gap percent,
So when we say gap, do we mean the open, today's open is greater than yesterday's high by something?
like pre-market gap. So I guess the at 4 a.m. Uh, well, not at 4 a.m., but like whatever, like if the price of something is up more than 40%, then I'm gonna be looking at it, and then I'm gonna be yeah, that's my first criteria. It needs to be
So
over 40%.
the okay, I'm just trying to put this into like a simple way. So what you're saying is that if the pre-market open is greater than yes,
Not the open, but the price in pre-market trading. So it could open at a lower price, but it won't show up on my scanner till it hits 40%. So it has to be 40% from the previous day close.
so it has to be greater than the close of yesterday by 40% in the pre-market.
That's right. There's other criterias. Like if it was trending if it was trading after market the day before, then that will also affect the way I look at it, right? But yeah, it has to be 40% higher than the pre-market.
So
I'm not the pre-market, sorry, the yesterday close.
right. So in pre-market, so what's the pre-market time?
Uh Anything before the market opens, right?
So
So
anything
between
before
4
9
a.m.
so anything
Yeah,
before 9:30 a.m.
that's right. It has to be at least 40% up.
Okay, hold on. Okay, so what's criteria number 2?
Tier number two is volume.
So what's the volume you look for?
It's more than 10 million, less than 40. Or like the ideal is around 20. It depends on the day too, right? But like, yeah, that's the criteria pretty much.
Okay. And what's the next one?
Then I'm looking for I'm looking for market cap and flow. Like the smaller the market cap, the more volatility I expect,
Okay,
and
so
the smaller the flow, the more volatility I expect.
which makes sense, right?
Yeah, the smaller the flow, the like less supply and more demand moves the price high, right? And then that will dictate how big of a size I'll take, right?
Okay. And then how do you determine where to enter shorts? Or is there more criteria before?
Yeah, there's more criteria. It's a time-based thing too, right?
So when you say time base, are you saying like maybe it's best to short at like 10 a.m.,
Like 11 is the
11?
best right now currently. Depending on the pattern, like it has to do something. Like if the pattern looks like it's like if like the stock's been going up pre-market and it hasn't retraced, right? It's most likely gonna just pop at the open and it's gonna retrace, right?
Okay.
The pattern matters, right? So if it's pop pre-market and it's retraced, like it's lost more than 50% of its volume, then I'm not interested in shorting it till it pops and retests the pre-market highs, and that's where the price action thing goes in play, right? I'm looking at the order flow, I'm looking at the order book, I'm looking at every little thing, like I'm like studying tick by tick, right? It
So
has to do specific things. Like if it doesn't do that, done, right? I might take a little size, depending if I think the volatility is dying out based on how I'm looking at the order book. But it's not an ideal. Like I know it's not an ideal trade, and if I take the loss, then it's on me. But yeah,
okay,
but the ideal ones, yeah,
so let's talk about this retrace thing again.
yes,
Okay, so for a retracement, which is subjective, but I know what you mean. You're saying that if it pops, goes up
yeah,
on the
yeah,
opening, right?
yes,
And then it comes back down. You're looking for a retest of the pre-market high?
yes. Like if it opens above pre-market high, right? It would usually have a pop, right?
Mm-hmm.
But that pop will be short-lived, depending on the volatility of the trade, right? I'm looking at all these little things, right? It depends on like the speed of the movement. Like the faster the move, the more parabolic it is, the more likely it's gonna have retrace a lot.
Right. So,
That's the discretionary part that I use, right?
right. Well, it can be measured in slope if you really wanted to get technical about it. But, okay.
I just know what it looks like, yeah.
Yeah. So that's the discretionary part. So open
That's right.
above pre-market high, and then you would wait for a retracement. So if it continues to go higher, then it comes down. You wait for a retracement back to the pre-market high, and you would also look at volume at that point.
That's correct, yes.
And you're looking for volume to be
The
higher.
volume is already like the volume. Okay, let's say we're having, uh, let's say, sorry, uh, I have a prediction. Like for example, like, for MRIN, right? That thing likes to trade. Like it traded previous couple of days. It
So
traded.
what is this prediction made off of? Pre-market?
No, it's made from the volume on the whole traded day. Yeah, the volume prediction is from pre-market. That's right. So whatever pre-market volume is trading, I my prediction is around like 10x. So it's like let's say it's trading 10. Let's say it's trading 10 million pre-market, right? The 10x like I multiplied that that number by 10 times, and that's what I predict that this stock will trade throughout the whole day. So like, let's say I'm expecting to see 100 million volume on the day. It's like, with a variance, obviously it's not going to be to the point. Sometimes it's 11 times, sometimes it's 12 times, right? But usually it's around that area, right? But sometimes the pre-market volume isn't there. So I use the calculation of the first hour, I times that by 3, and that gives me the prediction for the whole day. So if something is trading in the first hour like 200 million on the day, then I predict for it to trade 600 million. Now there are rules to that as well, right? Now if we don't retrace at all, that will attract a lot of people, and that will fuck with my prediction, right? So the volume will go up, and I don't know how much it's gonna go up. That variable I don't know, so I don't touch that, right? But if it retraces for more than 50% of the move, or if it retraces more than 50% of that move, the volatility will die out and the volume will die out throughout the day, right? Because a lot of people don't like to buy. Because most people don't like to buy when something's fallen.
Yeah. So where are you getting this number 3 and 10? Is that just from testing it on different symbols, or where is this coming from?
That's right.
Okay.
Yes. Yeah. It's from my data. I have data. I track pretty much. I track anything under 100 market MCAP, under 1 million float, 1 to 3 million float, 3 to 5 million float, 5 to 10 million float, 10 to 20 million float, 20 to 40 million float, 40 to 80, 80 to 160, right? Then I track anything between 100 and 500 MCAP, 3 to 5 float, 5 to 10 float, 10 to 20, 20 to 40, because they all react differently, right?
Yeah, I agree.
Yeah, they react differently, and I look for a dollar block value. So like if something is trading $2 billion on the day, or 3 billion, like most of them, like if I'm looking at my data right now, most of them like to trade around 300 million to 500 million. And I know if I'm looking at that if I'm looking and I track what's the amount of dollar volume that's stuck at the top, right? So if something goes up to a certain point, like how much volume did it have before it started retracing and lost all its gains on that particular day, right?
Yeah, so this sounds a lot like what Dux does, you know?
Exactly. Yeah. Dux is one of my Dux is one of my this is the only person that I can trust about what they're saying anyway. based on what I've tracked. Like I've studied Dux. I've studied like all the traders that I like, right? Tim Bertani, like I've studied, like I've had a lot of mentors. Okay, let's just say that, right?
Yeah.
I'm almost 40 years old. Like I've traded for a long time.
Yeah, so you got, because dollar block, volume prediction, these are all Dux methodologies.
Yes. Yes.
Okay.
Yeah. He uses this similar. Yeah. He basically. It's very similar. Yeah. I've had his DVDs, and I've tested this stuff, right? A lot of these ideas are from him, but I use a lot of, because I come from like discretional trading, just straight up.
Well, I mean, Dux is still a discretionary trader.
No, I know, but I know, but I trade. I look for like retracements. I use like Elliott wave theory. Like I apply a lot of Elliott wave theory to my trading, and just like Fibonacci, right? Fibonacci numbers, and I trade off them, and like a lot of the stuff that Dux talks about, and I use like volume profiles too, right? I trade off that. I have a lot of like there's certain EMAs that I use and stuff like that, right? I have a lot of things that I use, right? But they don't mean shit unless some of the stuff that if my data doesn't like it, then it means shit to me, right?
Right.
Because I do scalp too, right? I probably trade like 65 times within the ticker. I have a core position and I trade around the core position, right? and I trade within different, like, because I've studied like how, like, well, like how certain algos trade, right? And this is something that I was taught about. I was passed on by another mentor to me. So I trade around like round numbers and like breakouts of round numbers, right? But they have to be in certain zones. They can't just be anywhere on the chart, right? They have to be like I can do like a bunch of different Elliott wave uh, predictions, and then they're all, since the Elliott wave is based on Fibonacci, I can do extrapolations. But if the volume doesn't match, it's gonna blow out my TA out of the water, right? It only takes like one guy with a fucking $1 billion account to destroy my TA. You know what I mean? That's why you take like that's when I take my losses, when I trade against if the volume is telling me to do a certain one thing, and I'm just kind of like stubborn on the pattern, and I think the pattern will work out. That's mainly when I take my losses, because the volume usually wins, right? So like if you have like more than like, for example, if you have more than 10 or 20 or 30 flow rotations, you're probably gonna get blown out. But if there's a like another like for example, like I'm also looking for a for like like the past of the chart, right? I'm looking for something that has bag holders at certain levels, right? I don't just trade like most of, like, yeah, like the my shorting strategies, the ones that make that work out the most, there has to be some kind of a previous trading on a previous day, right? For example, for like MRIN, it's a multi-day runner, and this one is just a multi-day runner setup, but it's losing volume, and I expect this thing to retrace pretty much to like $10 within the next, based on my stats. My stats basically say that all these things will lose 75% of their gains within 10 or plus more days. So a lot of some of these things I do swing on a different account, but I take small size.
Right. Well, plus you have to pay the broker. So
Yeah.
Yeah, I mean, I think you have something. But I think the other stuff is just kind of like, it's very subjective.
Well, it is, and it's not, because it's I mean, I can argue that, like,
Right, but I'm saying, like, when you say, so like this is something I would not do. Okay, just for
right.
me personally, where it's like, well, I may use this here and I may use that there. Like, you have definitely like a feel, and it works for you, because if you say you make money, like, you make money. But I'm just saying, there's a little bit of science and a little bit of magic. That's not a bad thing. I'm not trying to put it down.
Absolutely. Yeah, it's not 100% data driven, like, you know what I'm.
The backbone is somewhat data driven, because even you admitted that without these certain parameters in there, then it doesn't matter what you use, it usually just doesn't work out, right?
Exactly. It's all about volume. Like my main data is volume driven. Like, it's all about volume, and like I can pretty much, and like I also track at what time of the day something stops running, right? And at what time it retraces. So like, for example, like I can tell that, let's say something ran up on the day, right? Like, let's say something blasts out of the gates, right? For example, let's take MRIN, right? Because I traded that. You can see like the volume was coming in. I trade off a dome, by the way. Do you know what that is? Depth of market?
Yep.
Yeah. So I have a screen that goes like super deep, and I can see where all the orders are pretty much. I pay for like all the data pretty much, that I pay for every single book available, right? Nasdaq Total View, the bats, everything, Arca, everything that you can fucking think of, I'm paying for it, right?
Mm-hmm.
So now you can see the data, you can see the orders like piling in, and you can see where the biggest like sell orders are sitting at, right? And they're all like the biggest sell order today was there around $25, and that's why I made the trade there, right?
Yeah. I mean, again, like as long as this like works for you, I just think it's interesting that you use Duck's backbone plus your own little. You have your own little
Absolutely, yeah.
way in. So yeah,
Because so like yeah, there are rules like when something like like when you have like a huge impulse wave, right? Usually you will see a 50% retracement. If it goes below that 50%, it will most likely lose the volatility and it will just fade all day. And I love those setups as well. Like I love trading all day faders, right?
mm-hmm.
Like I wait for a certain like especially something that's been running up for days, right? And it's trapping all this volume every single day. So it's trapping like $2 billion of volume traded, and then he has like another 2 billion the next day, and then he has another 2 billion. But now we're trading at $20, right? So you need way more money for this to be sustainable, right? When that money runs out, that's when the sellers come in, and that's when that's when people that are pretty experienced short selling, I believe, start short selling, and then people take profit, and then you have, that's where you usually see the offerings come in, right?
Mm-hmm.
And another thing that I know, I also do SSC filing. I also read through the SSC filings, and these guys have. I can get into it if you want about this particular setup. These guys used to be $35 million market cap company, right? A couple of days ago, before this whole run up, right? They're trading at right now they're at $225 million MCAP, right? MCAP, and they started at 35, right? So they have a shelf, right? They have a shelf that has $37 million ready to dump, right?
Mm-hmm.
But since they were a baby shelf company, right? Since they were a micro cap company, there's a rule where you cannot sell more than one third of your shelf registered shelf, right? You can't sell more than one third of your registered shelf at a time, at every 3 months, right? So for them to be able to sell the full shelf, they need to close on a day. They need to be above 75 million market cap for them to get access to the full shelf, right? And also these guys have around 330 million accumulated deficit, right? They lose around 20 million a year. Like I go through all this stuff. I look at their liabilities, I look at all their assets, I look at all their shelves, all the registered shelves, ATMs, pretty much anything that will dilute the price, right? Because that's what usually they do, and I believe there's an algo on this thing, just pumping the price because it's easy to pump this kind of stuff with.
Well, now you're bringing up something that's very subjective. Like, I can't disprove that there's algos, but I would say most big hedge funds and most big players do not trade stuff like this.
No, I agree. But the people that buy the offerings, they do, right? They're banks, right? They buy out the offerings, then they pump the price. They give them okay, sure. We can talk about this. It's like some boiler room shit, but it does happen. Like, but yeah. Usually when they buy it out, when these guys buy out the offerings, they pump the price and then they dump the offering because they own the float, pretty much.
Right. Yeah.
You can own the float on a small on a 10 million floater. You can buy out the float. It doesn't take that much money. These guys are like, these brokers have the type of money to do these manipulations, obviously. And I'm not saying they're doing it all, but they are influencing the rest of the market to jump on these plays, right? So when they're like pumping the price, everybody wants to trade something that's moving like $10 a day, and this is doing like $10 moves like every day, right? It was doing them.
Yeah.
But anyways. For me to know like I have certain areas, right? So like the time of the day, right? So like if the price hasn't dumped, like if it comes to 10:30, right? And the price like 10 between 10:30 and 11:30, and I expect the price to break a certain level, right? That's where the price action comes in, right? I'm looking at this level and I'm seeing that the like I'm expecting volume to come in here, right? Based on previous uh previous data that I have, and also uh previous, my experience, right? So I'm looking for that specific time of day, and if the chart doesn't make another lower high, then it's most likely someone's not done pumping the stock, and they will repeat the process, right? They will just like at the beginning of the market, they'll pump it up, they'll dump all their shares, and they'll rebuy them again, right? I like okay, yeah, this is like okay, we can say that it's a little bit of a conspiracy, but uh I believe that the biggest players do shit like this, right? And they enable these they enable retail to like help and move the price. They hold the price at certain levels. And if those levels don't break, then I don't like I don't like the price. That's when what I personally mean by price action. If it doesn't break at this time of day, it's holding this like $20 area, and it's just accumulating, like it's going back and forward, and like it's creating that consolidation area. Like it's consolidating.
Mm-hmm.
And if it doesn't break by like 11:30, if this thing doesn't go, if it doesn't make another low, that's when most of the short sellers will cover, which will add more buying pressure to the stock. And then you'll have people that are dip buyers, right? People that understand that the shorts will cover here for profit, and then they'll be, because you don't want to be, obviously you don't want to be, well, I don't know if it's obvious, but you don't want to be holding these things for more than, most of my trades last like 8 to 15 minutes, right? On average. Well, my core positions may last 2 hours, but I trade around them. So like I'm like
You're
getting
recycling shares.
exactly. I'm recycling. That's right. I'm buying my stop loss pretty much. I want to buy my stop loss. So when the price goes up and like blows me out of the water, I have to cut, right? So I have a level that can trade off of. This is way more advanced, right? The ones that play like the this is, I wouldn't suggest anyone doing this that it's a newer trader. But if this had, like, let's say the price action of yesterday, like we had a spike around 25 and that failed, right? Well, I'm expecting there's going to be a lot of back holders holding there, right? And I need the price, and if the price gets to there, right? Since the float is only 10 million, right? I'm only looking for I can't have the trading there to be like over 100 million. Let's say there's 100 million traded at the 25. It's most likely going to break out, right? Because the float is only 10 million. If the float was 20 million, then I'm looking for 200 million. If it's 30 million, right? I'm looking for 3 times the float for this to break out, because the people, that's why most breakouts are fake outs in these type of markets, because you need to buy out all the back holders, and you need more volume to bust through the back holders. And now all the inexperienced shorts that didn't cover, they're gonna help bust the price even more, right? They'll get liquidated, or they'll have to take a bigger loss than they want, right? So I'm recycling all the way down, and I'm playing pretty much between certain. I use like an 8 EMA and a 32 and a 34 EMA that I like to see, like if they're I'm using them as guidelines, like somewhat, right? But they don't mean shit if the volume isn't there, right? Like none of my indicators mean shit if the volume is not doing what I expected to do. So I can pretty much predict when the top is based on dollar blocks, right? So like I track how much dollars are stuck at the spike of the day. So let's say I'm looking at every single low flow that I've tracked, right? So I'm looking at it like in this type of criteria. Obviously certain catalysts like certain catalysts will be bad for me to trade. Like if there's like a phase 3 approval, or they're signing like a fucking deal with Microsoft or some shit like that has like some insane uh a catalyst that would want people to buy, right? That also, like, I also take that in account. But that usually, those type of catalysts would fuck with my volume predictions, right? It will attract way more volume that I predict. And if the volume prediction is higher than I predicted, then I have to take a loss, or I have to cut the trade. And I usually do it before I take a loss because I don't like the price action. That's the thing where that's where the price action comes into place, right? So I'm looking for like if something had a blow, like if something went up really up and then it like retrace, and then when it tries to go up again, I will take a short like 50% of that retracement. And if it blows out through that level and it retraces the high of the day, I would look for that breakout to happen. And there's certain things need to happen in the order book for me to think, okay, this is a real breakout. If most like there are algos that will make it look like it's a real breakout, but it needs to have the volume as a follow through. So they will try to attract people to buy those breakouts, but most of them just fail, and they just pretty much they trap a lot of back holders. And then you have all these back holders, and I just like to trade off the back holders. So if I'm like, I never want to be trading above the back holder. So if like the price is like above a certain area that has shit ton of back holders, I'm not going short. And if it's trading like above the 52-week highs, I'm not shorting that as well, right? It needs to have a previous resistance, and it has to be then less than like 6 months. Like the closest it is to the day of me trading, the better it is. The odds of me succeeding are better. So like if there's back holders around $20 area, and we had some kind of blowout like 2, 3, 4, 5 days ago, or like 3 months ago, like anywhere between now and 3 months ago, and there's a shit ton of back holders at the top, I will short off that level, right? Depending on the price action with that. So I'm looking at that level. Like I already know what level I want to short off.
Okay, I
And that,
understand.
yeah,
You're
yeah.
belaboring the point. You're also yelling, so just calm down. You're okay.
No. It's just because my mic is far.
Okay. So, yeah, I mean, you said a lot. Uh, some things make sense to me, a lot of it does not. But I think it
No.
was good to explain, what you mean. Um, and it seems like you're spending a lot of time deciding on what you want to do, when you want to do it, and what tools you'll use from your own mind, plus
Yeah.
uh, volume stuff, which is,
Volume is number one, pretty much.
yeah,
Yeah. And
yeah.
then and then the retracements. But to me, it's like all this. Yeah, I said all these things. I don't know if I explained it properly, but it's
Well,
not
you're
that
making a lot of
complicated.
assumptions like, bag holders at certain spots. I mean, maybe, or algorithms here, maybe. Like, I get what you're saying. Um, I don't think anyone could replicate it. The volume part, sure, because I mean, that's pretty specific. But all of the things that you do is you have all these tools, and then you decide to you, like, this is what this means. Um, and it works for you. I mean, that's all that matters in the end. But I think it's a lot. It's a
Yeah, it's
lot.
true. It is a lot, but like
It is a
I
lot.
do this every day, and I spend like
Yeah,
all my
you
time
probably
thinking
spend
about
like
it.
a lot of time. Yeah.
Yeah, I spend like 16. I used to spend like 16 hours a day doing this shit, right? It's like it's not a joke to me, right? Like what I'm saying, I do these calculations in real time. Like
Hmm.
I already know what I already expect to see a certain, like a pattern, right? But the pattern has to match certain volume, uh, like a certain volume, right? Because
Hmm.
like you can't be like I can't be like, for example, like it's really dangerous to be shorting 10 million floaters. Like anything under 10 million, you're risking of losing your account. Like every time I short this stuff, I already know that I might lose my, like, not I might lose my, I know that If the volume just gets like double, triple of what I'm expecting, it's gonna blow me out, right? I'm gonna take a bigger loss. I'm gonna have like a dollar slippage, right? It's a lot of money, right, for me,
Mm-hmm.
right? So uh, I already expect these things to happen before they happen, and I already know how I'm gonna react to them before they happen, right? Like I have a plan, and I have a plan, right? And
Yes.
I do extrapolate most of my stuff from Fibonacci, right?
Mm-hmm.
So I expect like I expect a big move. Like for example, it has like for example, it goes like a one wave. Are you familiar with Elliott waves?
No, I don't believe in any of Elliott stuff. So
Okay, that's fine. That's fine.
yeah,
But it is based on a lot of my strategy is based on psychology, right?
but price
Too, right?
is psychology, right? Like
That's
so.
exactly.
Yeah.
So I'm most like I'm looking for like three waves up before I feel like there will be a reversal, right? I'm looking for three waves up, and you can use this on every single time frame. But my extrapolation happens on like the daily. Like I look at the whole movement, right? Like I look like if this move started like 5 days ago, I'm extrapolating from that from 5 days ago, and I already know what zones. If this zone blows up, I'm my next zone of like where I will like let's say I short 25 and that fails, right? I will take a paper cut on it, right? Like I'll cut my but at $30, you bet your ass I'll be shorting again, right? Like it's not gonna deter me. I'm not gonna just like quit trading, right? But
Right.
it has to meet certain criterias, which is I stare at the order book like a hawk, right? And I have a lot of order like I've traded the order book I trade off the order book all the time. So I don't know, it's just like second nature to me. I don't know how to explain it. So like price action to me is king, but it volume causes price action if that makes any sense. So like if I expect something to happen in a certain area, if the volume doesn't show up in that area, then it's probably gonna do the opposite of what I expect, right? You understand?
Yeah, I understand what you mean. I don't. Again, like it's something that is way too subjective for me. Like
I feel
it's
like I can program this system, like, and that's why, like, I was trying to figure.
that's
I
gonna
like,
be real difficult, I think. Yeah.
that's exactly why I was just asking because I was like, this is insane. Like, what I'm trying to do is kind of insane,
Yeah, it's insane not because it's like
but I
the
feel I'd make way more money if I wasn't the one trading it. If I had a computer, just like if I could have an algo that can like look at they can scan the order book all the time and figure out the imbalances between sellers and buyers. You know what I mean? If you can read the depth of the market and you can see how they flash the book and you can we can calculate the imbalance between buyers and sellers in those particular moments. I feel like I feel like the an algo would be better than me. Like I feel like I'm pretty good, but I have a 90% win rate, over 90 actually, over 90%
hmm.
win rate in June especially. I only had like 2 red days, not even red days, 2 red trades,
Right, because
and
you're
that
recycling.
no, because I was trying to go long.
Oh, okay.
That's why. No, but my recycling just buys me my stop loss if that makes sense. Like
Yep.
I trade 50% of my position. I don't touch, but I do add and
So here's where I see all your influences. I mean, I see Bao from MIC. I see Ducks. I see a little bit of Tim G, obviously.
yeah, Team Graton, yeah.
Elliott wave theory is as old as the markets, I would say.
Yeah, because
Yeah.
I used to trade uh I used to trade cryptocurrencies, but like the futures, and I trade on like 10 leverage,
Hmm.
right? So a lot of my scalping comes from that, right? So like I just want to be right for like the next 30 seconds, right? When I take those type of size, right? And a lot of my Elliott waves play out in those like I mean here, let me just share my screen so you can see what I'm looking at. So I'll show you something. I mean, it's gonna look like it's gonna look crazy to you, but if you can
Oh,
see.
that's what that is. Okay, it's from WoW. I was like, what is this character?
Yeah. I play mage. Yeah, I used to
Yeah.
play mage. Yeah,
Okay.
Warcraft. Yeah. But you see this? You see how I extrapolate? Can you see this?
Yeah, this is fucking nuts.
Yeah, it is. Here we go. You see how I extrapolate? Like I know what fib levels I'm looking for. You see how like here, for example, like see how this like was a blowout top right here? Why? Because there's a lot of bag holders here, right? It's a psychological level. Obviously, the volume here was higher uh than expected, but like you see how this retraced and it hit like what was this, right? You see how it comes in these like fibs. If it doesn't break these fibs, it usually will like retrace up, right? These are like the main fibs that I look actually, the orange ones here, because they're based off Fibonacci.
Hmm.
Not fibs, EMAs. They're based off Fibonacci, right? I don't really like. I only use these to see like where most of the people are trapped, right? I won't just
Hmm.
like be buying random lines, right? They have to be retraced to these areas, like these like golden pockets. You see like a golden pocket here. There was a 50 retracement right here today, right? It just did this stuff, right? And I expect the price to like drop here within the next 2 3 weeks, right?
Let me see.
See the zone?
Yeah. The purple
So
zone, right? Is that what you're talking
yeah,
about?
the purple zone. So like if I do my retracement, my fib like okay, this is the 1 hourly, right? You can see what I'm looking at, right? So it's like 1 2 3 4. This is the third wave up, right? So I'm like looking for something that it's gonna go, like I can assume this is like the first wave, maybe this is the third wave here and the fifth wave there. Now, if this like gets broken out, it could be an extended fifth wave, there are things that, there are rules that if something happens, then something next will happen, like, but I expect this to retrace at least to 1358, right? Within the next week. And then after, I'm looking at this golden ratio, but most of them will retrace about 75% of their gains before they have a bounce, right? If they have some kind of a bounce. After all the hype is over, right?
Hmm.
That's what that's what I trade, and been working for me pretty much. Now, if I
And
can
you've been
find a way
trading
to
like this for 3 years, or?
no, I trade.
Well,
I've
I'm
been
saying like
trading.
you said you've had success for 3 years, so I'm assuming like that includes this entire
I've been
system.
trading for 15 years.
Uh huh. But you
Yeah, I've been
said,
trading for 15 years, but I've it took me 4 years to become profitable in trading equities. But I was trading cryptocurrency before,
I see.
and
So
I used
was
to
it
be a
specifically penny stocks where you found your stride, or?
yes. I like penny stocks because there's no option chains, right? Option chains influences. Yeah, I can. We can get into that. Like I know a lot. Like the option chains. Like
Oh,
market makers use.
yeah. I was just saying. I just was asking.
Yeah, penny stocks. Yeah.
Yeah.
The best things to trade are like I'm not saying the best things. I'm just saying that I like to trade companies that are garbage, and they like to dilute companies that like to dilute their prices after they do a PR. So most of my stuff is I find that it's high odds and it's very easy to trade because there's no big banks don't touch the shit, right?
Right.
Uh, like people don't. I think people run their algos on these things, but they're not like hedge funds or anything like that, right? Maybe they are now. I think because there's a lot of volume right now, like my data has been all fucked the last, like I've been getting like 10x more volume than I usually would have like $100 traded on the day, not million 100 million volume traded on the day was a lot. Now it's like now you got like 500 million, you know, like you got like a lot trading, and there's a lot of runners too, right? There's a, you know, I look at stuff like this. So like let me see something that I traded earlier. Like for example, this one. You see what happened here? I was short in this area here when the breakout happened. Can you see this?
Yeah, I can.
Yeah. This was a company. This is the symbol is NOVN, right? I was short in this area right here, 19 area, right? And then I covered in this purple zone right here, right?
Mm-hmm.
And I did swing a little bit till this area here, till $15, 15.30. I think I covered my rest, and then the offering came in this area here, right? That's when the offering hit, and I missed it by a day, but. And I have a lot of reasons why I took this trade, right? Because it like these guys just did a reverse split, which usually they do before they're ready to pump the stock, right? They talked about phase 2. They had some phase 2 on their drugs, which brought the volume, right? So it had you see, like you can, so you see how my retracements here, like I'm looking at these areas here, and I'm looking for the price to fail to break out here, and I'm looking for the price to grind too, right? I'm looking for it to grind up in this area. So it's like breaking out, it fails, breaking out, it fails, breaking out, it fails, then I fucking hit it, right? And I use this as my stop level, right? And then when this thing runs and runs and runs, then I just cover half, and then I run the rest. I cover more than half. Like I usually like to cover like 80%, and then I run the 20% because I don't know what's gonna happen the next day, because these things are low floats, right? You can wake up and they could be gapping up like I'm still trying to perfect like my my swing, like getting better at swinging these, right? But look what happens, right? They all like lose. Like look how much they lost from the top, right?
Yeah, well, the thing is that shorting penny stocks is a high odds thing.
Exactly, and
It's
that's what I traded. Like that's the
right.
only.
It's
That's
just
the only.
timing when. That's
And you
always.
see, like you see, we're in the 75%. Exactly, the timing is everything, and that's what I'm adjusting that every day based on the volatility that we get within the market, because every day is like I use like I look at the collection of data, right? And every day, and I'm like including, like I'm looking at the month, so I'm like looking at the month. Okay, this month we're getting more. Like when the stimulus check got released in June, we had the crazy volatility, right? So a lot of that, like that, a lot of that goes into my data, and then I look at it. Okay, June is a lot. So like for example, like right now I'm just waiting for these people to just lose all their money so I can start shorting again, you know? Like I feel like being a short seller right now, it's extremely dangerous. If you don't have the discipline, you're gonna lose a lot of money. If you don't know what you're doing. Like, yeah, there's a lot of things that go into my my strategy. It's not just like there's like, at least 10 different things that I look at, right? I go through all the SEC filings, right? That's like I look at their fundamentals. I look how much money they're making, how much money they're losing, what's their cash burn. I look at everything like that, right? I have like a few tools that I use to do it. But
Well,
anyways, yeah.
but the thing is like now I think hopefully Skylar has a good idea. He says that you're a genius. So.
okay.
I think he has a good idea now. And I appreciate you sharing.
This didn't happen overnight, and like it's like and yeah, I know, and I can guarantee it that people that haven't been trading over 8 years, I think that it takes you at least 10 8 to 10 years to get profitable in the markets. Unless you're spending 16 hours a day, you might be able to do it in like 4 years. But if you have a really good mentor and someone that can really hold you accountable, you can probably do, like, I believe that people can do it within 6 months to a year. I believe that people can do it within 6 months, but they're very special people, and they have like really good work ethic, and they have really good emotional stability. Because I feel like when you start adding to your losers and when you do shit like that, that's when you start losing all your money. And it's happened to me a lot. I've blown out like 5 accounts, you know what I mean? Before I start making money. I think I've lost over like 100K before I start making money.
Yeah. Well, KNW, I thank you for enlightening us and teaching us the magic that is your trading style. And thank you for sharing your also concrete material, although it's pretty much, it seems like it's kind of more Dux's stuff. So
Absolutely. I've learned a lot from Dux, and like basically like the things that I saw happening throughout the years, he actually had numbers, you know what I mean? He was just like, because like he would say like, okay, when something is running up on the day, it would run up like at least 30%, and that will dump, right? If something is running up pre-market, it will run up 30%, and it will dump at night like 9:45, and then it will just like dump all the way to 11, and then it will have a bounce it will have a bounce that will go up, and you can actually use the Fibonacci, which pretty much shows you those levels, right? He had like what Steven Dux. Okay, Steven Dux, he's figured out the Fibonacci levels without using them, by using his data. Okay, that's when I was interested in his. That's when that made me interested in studying. I wanted to see what he was saying, and I think I've learned a lot from Steven Dux. Like I bought all his courses, right? I've learned a shit ton, and I've tested it, all this stuff, right? It's not, and I think Steven Dux is not for everyone, and you have to be pretty advanced to understand what he's saying. Like you have to actually, because he's very hard to understand, and it's some of the stuff he's saying. There's a language barrier too, and it's not very easy to digest. You really have to have a lot of experience before. You have to have good fundamentals before you.
So some people asked, do you have a YouTube channel? My assumption would say no. And then Booty God asked, do you post your trades on any website I'd like to see?
No, I don't. I'm not trying to impress anyone, and I don't even want anyone to know that I exist, pretty much. Yeah. I don't want any fame. I don't care, right? But like I've actually I've tracked your content since I think you had a course, like a Triforce.
Yeah, I did.
Yeah, Triforce thing, right? I tried to learn. I wanted to study what you did, but I never got your course because.
Yeah, what I do is very different from this.
No, I know, and you're actually trading markets that have a lot of hedging activity, and you're trading against algos, and you're trading against the smartest minds in the world, and you're trading against banks, and you're trading against hedge funds. You're trading markets that are and they're influenced by like global news and macroeconomics, and and it's extremely challenging what you trade, and I'm trying to learn. I'm trying to learn what your criteria, like what are your data points that you're collecting, and like maybe I can apply, because I do apply like volume profile to my trading as well, which most future traders use, right? They use like the the DPO charts, right?
Yeah, so I mean, that kind of stuff actually, again, you need more information. Like you could set them as levels, but they'd mean nothing without context around them. So yeah, like over the course of like this next year I'll be releasing a lot more stuff about like algorithmic trading and how I see the markets and how to test and how to data mine and all of that. Because I kind of deleted all my stuff because I'm taking my business in a different direction, at least for a year. So
Right.
we'll see how it goes.
Because I can program in Python. Like, well, I don't know. Like, okay, let me rephrase. Like, I can read code in Python, and I can like.
Yeah, I mean, to do something like this, like you would need to probably hire a programmer, and
Yeah.
they would have to sit with you. And
Yeah, because I do have a lot of things that I would love. Because like I'm telling, my strategy is like over 90% profitable. Like it's
right, but again, it's the same thing with Steve because it's like
I understand.
he sat down with me and was like, I'll explain this to you. And it's like, okay, here's the things that we can definitely code. And here are the things that we cannot code. Like, so.
No, I understand. I know.
Yeah.
I know what I'm asking is hard. And that's when, like, when you were telling me, like, look up Google, like, you think I haven't done that? Like, I have. And it's just like, and like, I don't know where to collect data. I would love to, like, because I do this manually, right? Like, collect this data manually, right? And it
Right,
takes
so
a
you would
lot
have
of my
to,
time.
but what I'm saying is that you would set up, like, you would just pull the data, and then when the data comes in, you parse the data into what you want, and then you save it in a folder.
Right.
You know, and Ashton also said spike heat. But yeah, I mean, I didn't mean to put you on the spot, and I know you got excited about talking about it, and you know, and I wasn't trying to be offensive. I was just trying to like
No,
say,
it's okay. It's fine. It's fine.
I was just trying to say like, you
I
know,
don't take offense. I just kind of wanna like learn. Like I feel like if I can program what I do,
well, you can
I would
automate
make
a lot
more
of a lot of like the data collection tasks and the parsing of that. Like that stuff is fine. You know,
like
coming
here,
up,
I'll show you my spreadsheet, so you know what I'm like. You know, you won't be able to see a lot of, but like you can see all my data points, right? Like look at all the data I collect, right? And I keep like pictures of every single chart, right? So I like if I want to look at it, like I look at it like this, like I can see what happened, you see, and then I based on this like. And I can extrapolate strategies based on the stuff that I collect too, right? So I know right now that going long is better, but it's just not in my religion to go long. I don't know. I gotta change that. But yeah, so like this is my data here, and yeah, so I like these are all like the low floats. They haven't happened a lot. This is just for the year right now. This is from 1 to 3. This is 3 to 5, right? 5 to 10, right? And then I just like go through this stuff and I look at it and I collect like the dollar block. So I can pretty much predict at what time, at what price, and what time of the day, at what price, right? It will be the top most likely. If everything aligns, right? And everything has to be perfect. If the volume is too high, I'm gonna get blown out, right? Because high volume is usually an indication of people wanting to buy, right? You want to like if something like on a day, if something traded, let's say something traded 300 million on the day, well, on a day that had like a huge volatility and it made like huge range, right? Like a huge trading range, right? So let's say the price went from $1 to $10. Well, the next day when the price, let's say the price opens up 40% pre-market, right? The next day, well, I want the volume to be trading at least 10 times less than the day before. So I want to see volume that's, if something is trading 300 million, I want it to be trading around 30 million because volume is bad for short sellers. Like a lot of volume is bad for short. You need the volume to bring the price up, but you don't want the volume to below the previous resistance, right? And that's where the data comes in place. And in real time, that's when my discretionary skill comes in, where I look at the price action. So I'm looking for the price action in specific zones. I'm not like I'm not just like picking some random numbers on the chart. I know where the price should go to, and I know it's well, I don't know, but I assume, right? And yeah, if it does A and B happens and C happens, you fucking hit it, right? And then 9 out of 10 times it works out. There are anomalies where you will take a loss, and it's gonna be a big loss, but it is what it is, right? That's you know, that's the life of a short seller. Like, you're always trying to protect yourself from a black swan event or something like that.
Yeah. All right.
Okay.
Well, I appreciate you sharing your stuff and
right.
trying to explain it to me, and hopefully.
I hope you understand. I hope it makes sense. I know it's complicated, but it's not that complicated.
It is. Some things, like I said, make sense, and some things do not. But
it just uses a lot of different systems, and I basically picked the things that I thought were had edge. So my edge is revolves around that.
Yeah.
And that's pretty much it.
So.
And that's like, yeah, that's price action. Price action is when you expect something to happen around a certain price, you're looking for the things that need to happen in order for this to fail or to succeed. And you already need to know what that looks like by just sitting at the computer and looking at those zones for like, I don't know, probably a year straight, maybe 2, 3, I don't know how many years. I can't remember how long it's been.
Yeah. All right. Well, let me get back to these questions and.
All right, no worries. All right, man. Thanks a lot for.
Yeah, no, it's not a problem.
Yeah, I can talk about this for days, but yeah.
Yeah, but I appreciate you going on the call and explaining it to Skylar, I believe, who was asking about it, and also price action stuff. So.
Okay, so this is your Discord. All right, I'll stick around here. Maybe I'll.
Yep, this is where it's at.
Okay.
Peace.
All right, man. Have a good one.
Let's see. Oh my God, there's so many things. Does he trade full time? Yes. Dude is definitely trading his personality. Mine is so much more simple because I'm too lazy to research like that. Falk says I have a 100% win rate. I also haven't made a single trade. No losses equals 1 win. Equals 100% win rate. I think he said that he is studying the market, trading 16 hours a day, and he is 40 years old. Dario says, Ich verstehe immer noch nicht seine Strategie. Es kauft Pump and Dumps, oder geht short shit companies. I think it's a little bit of column A, a little bit of column B, Dario. Yes, absolutely, Dario. Please ask if he is trying to get singles daily or trying for home runs every day. I think, Mitch, from what I can gather, it's a little bit of both, right? Like he's shorting, he has like a core position and he works around that position. So the idea here being that he's recycling shares and he's making small money or break-even trades, and then he may hit something where he goes, he may swing it, but he's also using a small position there. And if he's really confident in something, he'll hit it pretty hard. I asked this in another stream, but don't think you saw it. Have you watched Trading Tickers 2 by chance, or the original? Yeah, I've watched both of them. I've watched 1 Take Notes around 2 years ago, just got TT2 and plan on rewatching the first, revising my notes, and then diving into 2. AW says it just got back. He is right. Okay, here goes the German Morse code. Yeah, I mean, I appreciate that Dario speaks to me in German. Or not speaks to me, but writes to me in German. Is this crayon trading? I think that was when he showed his chart. It was a lot. If you don't pay attention as a short seller, you get squeezed out of a stock. Ashton says Google has been great for me. We asked about his YouTube channel. Tilo says, if I had money, I'd like to share my trades. And at least to verify that I'm not full of shit. Ashton says, sounds like a man that doesn't talk about it much, so he's just word dumping because it's all built up. Yeah, I mean, to articulate what one does from a discretionary standpoint is generally a lot of words. It's not so simple. Dario says, are you guys from the US? Yes. Any newsletter or blog? I think we answered that. Spike key, yep. Too many people that say their strategies but never tell how much percent profits they make. Falk then says, yes, but 90% win rate, so must be good. Well, to be fair, I mean, Ducks hardly ever loses too, so it's not out of the ordinary. No disrespect, but you hear that same thing time and time again. If something works 90% of the time in trading, it doesn't work 100% of the time. Well, here's the thing. Like, you could find something that works 80 to 90% of the time. But over time, it's definitely going to degrade on some level. It's not impossible to find, it's just difficult to find something like that. And remember, he's using a little bit of data and his own discretion, so he's combining those two things. I doubled my trading account from November 2020 since Bitcoin went to 60K, and I still want to hide my trades because I've made some embarrassing losses, but people brag about their wins and won't show. This is also true. Mitch is from Cocoa. Mitch is from my hometown. I didn't live in Cocoa Beach. I lived in a place called Merritt Island. I can share them, not that anyone cares, but everyone hides their trades. Why? That's not true. Ashton says, you've been trying to say goodbye for 30 minutes. Yes. Well, not goodbye to the stream, but just like, you know, he kept repeating the point, so I just had to get him back on track. Not saying goodbye like in the middle of his discussion, but just like wrap it up in the sense of, you know, we discussed that point already. Why does Duck still collect data points manually? I thought you have communicated with him that a big part of his data spreadsheet can be automated. Well, why do people continue to do their habits when there's something easier? If you can answer that question, then you may win a Nobel Peace Prize. In fact, I don't go on the internet sharing my strategy because I think I can do better, and I'm not going to teach anyone. And if I'm not that confident, but if you talk about results, you need to verify. I agree. Maybe not a word dump, just no linear thoughts. Well, depends on where you entered the conversation. I mean, I followed him pretty well. I took notes, though, as he was talking. Which, when I talk to someone explaining a strategy to me, or explaining something complex, I often take notes. I generally carry around like one of these is in my room, and there's notepads everywhere. And my wife, she gets me stuff like this for Christmas, which I love. So this is Nick Miller, and it's got all of his quotes on there. It's one of my favorite little ones that she's gotten me. So it's got like, Nick Miller, turning lemonade into lemon since 1981. Do I regret it? Yes. Would I do it again? Probably. Life sucks, and then it gets better, and then it sucks again. So these are all like quotes from the show. I smell like a baby in a damn meadow. Drinking to forget? That's my sweet spot. I'm not convinced I know how to read. But yeah. So I tend to do that when people are talking to me about something or trying to explain something to me, and thus I think it helps me follow what they're saying. Dux verifies his trades. That 10% could also take a fat shit on your capital, mental, and monetary, depending on who you are as a trader. Don't mind me, just read trading books, watch DVDs, blogs, etc. Not a single trade made. You mentioned you deleted a lot of stuff and you're now adjusting back or something. Would you speak to that? Oh yeah, so what's going on is that I'm changing my business to more of a model of like community driven. So I won't be selling anything anymore. I'm going to really just focus on making good YouTube content and kind of I don't want to say like open source what I do, but just more or less teaching in a way that is more open and has no pretext of, hey, buy my course. So to do that, like I kind of like close the door to Triforce training and close the door to my newsletter. You know, obviously I still have to fulfill my obligations to people who are my subscribers and or who bought the course and stuff. So I mean, that's like a year out. But I wanted to focus this year on like building good content and building a community around my content and doing it kind of for free, sort of, I guess. So that's the plan. And and what I also wanted to do, if I'm going to do that, like I can't have content that's like 4 or 5 years old because a lot of it is outdated or things have changed or stuff like that. Does that make sense? Like I'm gonna release probably this weekend like an official email, and then also I'll do like a YouTube video post. But I was really inspired. For me personally, I was really inspired by channels like Dumb Money with like Chris Camillo and stuff, where they just kind of had an open community that would interact with each other and help each other and do meetings like this. And some people would do YouTube stuff, some people would do what was I gonna say? And if I lost my train of thought. So if or it was, I was talking about Chris Camillo. So like in his community, when they first started out, it was like people were writing code, people were making websites, people were like helping with the YouTube videos, creating content, asking questions, saying, hey, can you do this with your content? So it was all open in that sense. And I really like that idea. I've always hated the tap dance of, hey, I can't release what I want to release to the public because I have to be concerned like I have a course, you know. Now I'm not going to take the content from my course and just post it on YouTube either. Like I can't do that either, but I figured take a year off from doing the tap dance and see how far I can build a community. You know what I'm saying? Well, I appreciate that, Mitch. Make the barrier to entry so if you want to see this, like and subscribe instead of, well, not even that, just like make it more so people can have access to me and to building a community. Does that make I don't know. I mean, I've just changed how I think about things in the last couple of years, and I really fell in love with the idea of community driven content. And that doesn't mean that I won't ever sell anything again, or that I'm prohibiting myself from ever doing anything. I just want to see, like, give myself a year to do it and see what happens. And if it works out extremely well, then continue to do it. And if it doesn't, then it doesn't. And then I'll decide what I want to do from there. But also, as a content creator and someone who sells courses, okay, like, I've looked at the landscape of free content and what's out there, and I just think, like, I can't be doing, or I shouldn't be charging what I was charging anyways, just because there have been a lot of great sites that have popped up in the last couple of years that have a lot more content for a fraction of the cost. So if I were to sell anything again, it would be probably course. Like, if I sold a course, it would just be like, hey, subscribe to this for $50 or $500 for the year or something like that. But we'll see how it goes. Yeah, so everything will be towards the Discord for sure. I don't know. I've never seen someone at least I've never seen anyone, like, who had selling a course pivot into something like this. And it makes me very happy, because I fucking hated, like, the course selling aspect of stuff and having to be somewhat vague about things. Do you know what I'm saying? And the crazy part is like, I say that, and then one of my students told me, he was like, dude, I asked you 4 times if I should take your course, and you told me no, and just to learn stuff for free. He's like, I literally bought it because you were never going to give me the answer I wanted. That's true. You know, it's like, I don't give a shit, you know? Like, I'll never forget this kid. He's like 21. He comes to me. He goes, I want to take your course. And I'm like, why? Like, go learn for free. Who cares? Like, go to college, you know, be free. Go work somewhere. Make 6 figures. Go have a profession. Do trading on the side. Don't spend money on my stuff. Yeah. He was like, I've never heard anyone say this before. Why even sell stuff? And I was like, honestly, I don't know. Because it's just, if people are like, hey, I want to learn from you, it's like, here's something you can buy where I don't have to deal with you. But, you know, that just kind of put me in a weird position and a state of mind that I didn't like. But now that I'm kind of like pivoting to something more free, like today I woke up at 6:45 in the morning. Was it 6? No, 5:45 in the morning. And I was ready to go, dude. Super excited. Feel alive and free. And like, if you guys want to support this, like, you can, all I ask in the end is that, you know, you're involved in the community, you show up on Fridays, like, you ask questions, like what we just did with KNW. Like, that's what I'm talking about, like getting a different perspective that is different from my own, from someone who's learned and has been trading. You know, I can't verify any of this information, but just someone who's just different and wants to talk about what they want to talk about. You know, that's what it's all about. And you know, and just making superior, well, I shouldn't say superior, but better YouTube content and focusing on that for a year. Or you could buy merch. You could be like Carl, who loves merch that I make. I have like a whole merch store. Or do nothing and just be here looking at a screen, looking at me, looking at you while I talk. So. I love the pivot, and it's great to see you get re-energized about the YouTube. I know for a bit, within the past few months, you were saying you weren't motivated to do the streams or post on YouTube, so I'd love to see the change. Yes, thank you, Schmiegel. Trading courses are typically so expensive, yeah. But what I'm saying is like, when I looked around, I'm like, okay, yes, I'm not charging like $5,000 to $7,000 like some people, right? For like a year. Like to spend a year with me, it was like 2.5K for TT1 and or I'm sorry, for TT2, and then 2K for TT1. Okay. So combined, if you combine those together, it was like almost 5K. But most people only chose one or the other. And then I look at sites like Plural or Udemy or something like that, right? And it's like $50 or $500 a year for hundreds of hours of content. Do you know what I'm saying? So where's the value proposition? And so I've also had to reevaluate my stuff. And it's not saying that my stuff is worth less, because obviously I put my time and my effort, but you have to be realistic. You can't just go through life and say, this is what it's worth, this is what it'll all be worth. Like, no, you have to look at, okay, what else is out there? And, you know, if you're going to choose to do this and be in this space, like, you have to be realistic with, like, what you're charging people. And I don't think a lot of content creators do that, because they think their stuff is very, very special and sacred. And it's like, most of the stuff can be found online for free anyways, through terrible websites that none of you should ever use. So you need to collect data all the time because the market dynamic and it's ever changing. Yes. Again, thank you, KNW, for bearing your soul. I've been trading, losing over a year. What should I do? I'm not smart when it comes to trading. You should learn how to program and watch my YouTube videos, and also look at all the books that I recommended in one of my videos. Yeah, I know, KNW. But it just, yeah, I was just trying to focus you on like one specific thing, and then you were going off on like 6 tangents. And that's why, if it felt like I was trying to rein you back in, I really was like trying to get you back in. So, I've never seen a problem with courses. The only issue is if you're buying a course from a dumbass, which to me means you didn't research who you're learning from enough or at all, which really makes you, the person buying the course, a certified idiot. Yes, I mean, of course, Folk. But I'm saying, when you sell the course, it definitely turns off a lot of people. And because you're coming on in somewhat of a false way, right? You're saying, I'm here to help you. I'm here to teach you what I know. But, like, buy this thing. So it comes off in a false way, in a certain way. And I always hated that feeling. Not that, like, my content wasn't worth the amount of money, and not that my content was bad, and not that I thought my content was much better than what other people had, or what other people were selling. But, like, I always felt weird about that. And I just would sap me of motivation to do anything, because I'm like, okay, well, what can I put out for free? But I'm also selling something, right? And when people put out free stuff on YouTube, it's to generally funnel them into a course, and they'll say a lot about nothing. And or they'll talk about their Lamborghinis or whatever. But for me, I've always been interested in teaching. My main mission, even when I started, was just to teach. Like, I never planned on making courses, and I never planned on really being an educator. But people kept messaging me about it, and then also, like, you know, I was convinced in a way, like, oh yeah, maybe that's a good idea. But I just didn't like that for me. Trying to condense 15 plus years or more in 1 hour, I know. Oh, my gaming channel? It is this. Hold on. Oh, Skylar, thanks for the $2 in Super Chat. Let's see. So this is all the links to my stuff, but this is specifically the gaming channel if you guys want to check this out. I'm going to be posting an interview here soon too, with a pretty famous person. I mean, I think he's pretty famous. It's one of the most famous people I've ever talked to. In the music space / gaming space. You were a cool dude? I'm not a cool dude anymore, Falk? I also love that the streams have been longer than an hour, yeah. It will, Wise, yeah. But the thing is that I want to build the content from the ground up. So it's like you gotta go through the basic stuff, then you gotta go through like, and then you can kind of get into the more algorithmic stuff. Folk, I don't know who you are, but you're an amazing human. I bet what you're saying. I get what you're saying, and I agree. I was attempting to add on to what you were saying. I haven't taken your course, heard of it though, so I can't and wasn't speaking of it. I also definitely don't doubt your course was bad. Not just saying that. I definitely say it looks like shit if I thought it. There are a lot of high win rate seasonal trades that have 4 times day max hold with a 1 to 2 bar profitable close. I know seasonality isn't enough in it itself, but what are your general thoughts on trades? Well, seasonality has the terrible issue of low trade count, and on top of that, it's ephemeral. And so you just have to be really careful. I think you could add like a seasonal component to a strategy. Using it by itself could be dangerous and also erroneous in the end. Also, do you think the more well-known seasonal trades are more susceptible to breaking down? Maybe, but I would say that seasonality was talked about a lot, and then it wasn't talked about. I don't know how popular that is, actually. Onmal says learning to program should be something you should... Oh, yeah, and let me speak to my students here real quick. Just because I'm doing this stuff, like I close the doors to everyone being able to buy and everything, doesn't mean I'm taking anything away from any of you, okay? Like, I think I said that, but I just want to make sure I reiterate that. Like, all of you who bought my stuff in the past or in the present or up until a certain, you know, basically like a day or two ago, like, I will obviously fulfill all my obligations. I will also, you know, keep the content up. I'm not taking anything away from anyone. So you guys don't have to worry. And basically you guys become like your own little secret club because nobody can actually enter that anymore. At least for a year or two. What's up, Silverback? I like to think people that have their heads down and are so hard at work, they are nowhere to be seen. Who knows though? Probably not. Hello, Mike. I'm your fifth subscriber on your gaming channel. Remember this when you get all yeah, he was a very interesting person. I was the first like on all 5 videos. Everyone has a journey. I started in penny stocks and then mid caps and large caps and crypto, then landed in futures. 10 years trading. Would you mind sharing the stops on your journey? Stops? What do you mean? I'd say I'd be down to game sometimes, but you're on PlayStation and I'm no good game Xbox. Halo fan since 101 hasn't been good since. I mean, I have an Xbox. I have all the things. Sometimes on a third shift, sitting inside a space shuttle or Dragon capsule doing configurations at Kennedy Space Center pads, you watch a lot of interesting stuff like Python coding. I played with Jack Kellogg the other day, and the dude is fucking nuts at COD. I did slightly better, but didn't think he'd be good. His chair in his video should have a hint saying otherwise. Think he was in a Discord call with his buds though. I just joined and was random in the game chat talking shit to the other team. I've mainly been a penny stock trader and a futures trader. I've touched options before, but in no real significant way. And I've always been more data driven in my approach than most other people. I would say probably C++, just because, well, Python is still fast. I mean, it depends. It depends on the task. That's really why people learn more than one language. So, but anyways, guys, I've been going on for 3 hours and I'm exhausted. I've been up since like 7, and I really, really, really appreciate everyone hanging out, and I hope you guys had fun. And I hope you have a wonderful long weekend. Please check out my free Discord if you haven't done so already. You can hang out in there, talk to me, talk to other people. Thank you, KNW, again. And I'll catch you guys next time. Peace.